Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for January 8th, 2026. Well, we're all getting ready for the USDA report. Kind of a quiet, 8-cent range in the beans. We did finish down 5 3/4 cents. People are worried about what's going to happen if the Supreme Court rules against the president's ability to use tariffs as he wants. That's going to be a very, very expensive coin flip, right? A very expensive turnout if it turns out the wrong way. And it just depends on what you think is the wrong way, right? March corn finished the day down 3/4 cent at 4.46. March beans finished the day down 5 3/4 cent at 10.61 1/4. Again, kind of a narrow, um, almost an 8-cent range, 7-cent range, which is kind of unusual. We've been having 15 and 20-cent ranges in the beans here, so kind of a calming day. I think people are getting ready for the report. How are the funds bet heading into this report? Well, they're flat corn, which means it's very weird. They really don't have a bet on at all, one way or the other, long or short. They're long about 85, 90,000 contracts of beans, which is they probably cut in half their position, which had been a lot bigger when we were on our highs there back when we kind of exploded really once the November options expired and the soybeans rallied $1.50. A lot of guys got on board with that. They've all been chased out on this last correction. So we're kind of sitting here hanging fire. And we'll see what happens on Monday or what happens with this tariff deal and with the what the Supreme Court says. March wheat unchanged on the day after a 7-cent range. So I'm not going to beat a dead horse. I think the market's just waiting to see what happens. The managed funds, they're bet short about 80,000 contracts of wheat. Not surprising. Wheat is at or near 5-year lows. We've had a little bit of a bounce, about 20 cents off the lows, which in Chicago, soft red wheat. Kansas City as well. We had a little bit of bounce, but the risk is real, guys, in wheat. Wheat does not have a bullish story, does not have a bullish weather story. Every time you turn around, somebody's harvesting more wheat somewhere. And, even when we have these uh, little spikes when something goes wrong in the Black Sea politically, they don't last, right? They haven't lasted. And it's been very, very frustrating. It's been a real hard 2 or 3 years here in this wheat market. Moving on to the protein complex, a good recovery today after looking like we might roll over. April fat cattle up $1.60 at 91.92. A really good recovery there as well. It kind of continues to march higher. That's a new 10-week high and a new high week settlement. So it looks like April fats want to take a run at 94, the old contract high. In the March feeders, we finished up 225. Same thing, we've had a tremendous recovery from the lows in November. Can you believe it? We were down at 293.30, and we have not yet taken out 360. But it looks like it wants to take a run at it one more time here. 359.40, the most recent high, also a 10-month high. So just a tremendous $65, $66 rally. Please take advantage of that if you're a producer. You know how bad you felt when we went from 370 down to 293, right? You don't want to go live through that again without some sort of a hedge. If you look at fat cattle, same idea. April finished up $1 today at 236.20. Again, a tremendous recovery after trading as low as 205. We had dropped from 250 to 205. We had a $45 break. Now we've come back about $30 of that $45 break. So is $30, $33, is that worth something to you? If it is, get a hedge on the books. But again, good action here today to finish up Thursday. Earlier in the morning, it looked like we were going to roll over and maybe go lower. So that's it in the protein complex. And the outside markets, another interesting day in silver. Silver kind of trading all over the place there as well. We had another trading range today of about $5, a high of 78.90, a low of 73.50. Right now, as I'm talking to you, we're trading 76 again. A lot of people are curious to see, are we going to take out 82.60? It's just been a vertical move with a couple big swings back. People get very excited when we make new highs. The risk out there is that, just remember, if it can go to 82, it broke down to 69. That's a pretty big punch in the face if you happen to be the guy that pays 82 cents for it. So, be careful. There's lots of opportunity there. Markets are really moving. My goodness, you go back to March of this year, March March 7th, 2025. This thing was trading $30. So we've gone from $30 to $80, and it's been a great move. And while we've had kind of sleepy markets in the other commodities other than cattle, this has been something a lot of guys have getting involved in. If you're doing that, just be careful. Know where you're getting in, know where you're getting out. There's a lot of risk right there. I am going to finish up real quick with talking about natural gas. Natural gas looks like it might be trying to find a bottom down here at this current level, although we're dancing, right? Dancing at 280. Um, just not long ago, a lot of people were very, very pulled up with natural gas. Natural gas was trading close to 440, traded at 430, and then here we are. I can tell you this: if we take out 280, there's going to be a lot of people, I think, running for the exit. So watch that level there. If you're trading natural gas, it's had a real big haircut here. Um, in the heating oil and diesel, we'll finish up with diesel, then we'll get out of your hair. Diesel, fell to a new 7-month low here on this last flush. We traded as low as 205 yesterday, and we've had a bounce here to 214. So obviously, some people stepping in there. And if you're a big end user, why wouldn't you? All right, 205, 214, whatever that is, it's still a heck of a lot better than where we were in November at 271. So continue to watch that. If you're an end user, just remember this: nobody buys the low, but it sure is better if you need to cover some inputs to be looking at it when it's trading 205, 214, than waiting and biting the bullet if we were to trade back up to that 270 level. So that's it for the day. This is Chris Robinson. If you're looking for help, give me a call, 312-638-8868. Who am I? I spent 20 years at the Board of Trade, trading in the various pits down there. 15 years ago, when the floor closed, essentially closed, all the business went to the computer, really didn't need floor traders anymore. I transitioned into working with farmers and producers. I've been doing that since 2010. So yeah, I'm heading into my 16th year working with farmers and producers. If you're looking for help, if you're having trouble keeping track of all of this information, if you're keeping track of what looks like a good cash sale, when should I hedge, what type of hedge should I look at, that's the type of stuff that I work with guys on all the time. I make suggestions. Clients make the final decision. I do not take power of attorney. I do not trade your account for you or anything like that. We do a custom fit for what your risk is, and you can always say no. I'll just give you my suggestions. The other thing I do, which a lot of guys don't do, is they'll put you in a trade and then forget about it. Or they'll put the hedge on and then they'll forget about it. I watch the trades for you every single day. If that hedge happens to gain a lot of value or lose a lot of value, I'll call you up with some suggestions. So you don't have to be an expert on how to manage options. That's the experience that I bring to the table. I can always make suggestions. Like I said, I make suggestions. You guys make decisions. We're here to make better cash sales. This is Chris Robinson. Have a great rest of the night.